Single family short-term rentals are down between 35 and 50% across the nation in major cities. This will impact the overall residential market for a short time. Venture capitalist and CEO Nick Gerleni states that the Airbnb market right now is in collapse. And how does that affect everything that's going on in real estate right now on the single family home front? One of the big issues in the market is there's a lack of inventory, but there are more Airbnbs on Trello and on Airbnb for short-term rentals than there are actually homes available on the market for resale. And so because there are major cities, and one thing that's happening right now that I was floored on, I had no idea that major cities like Austin, Texas, Phoenix, Arizona, Orlando, Florida, Tennessee, right in some of the heart of Nashville, Knoxville, and some of the biggest cities in Tennessee, all over the United States, from the panhandle of Florida, some of the biggest cities like Dallas, Fort Worth, and some of the biggest cities in California, like at Los Angeles, Orange County, San Diego, Airbnbs are dropping. And in some of the largest cities like Austin, San Antonio, and Phoenix, we're seeing declines of over 47.5% on the usage of Airbnb just over the last 6 months. One of the hardest summers for short-term rentals that they've ever seen since their original inception. And so, ladies and gentlemen, these big markets, you guys might be living in them. And if you're an investor and you're looking for real estate, one of the things that analysts are talking about right now is an influx of these Airbnb properties, these short-term rental properties, getting an influx of sales in the market over the next few months and as we lead into 2024. So if you're in some of these large markets, one of the big things you want to pay attention to is an influx of homes and inventory on the real estate market that is directly affiliated and pressed based on the fact that the Airbnb and short-term rental market is under financial distress. And in most of the big cities, in fact, over 20 of them, we have seen a decline in excess of 30% just in the last 6 months. So how do you strategically position yourself to go in and watch these properties? There's a few different ways. You want to be involved with realtors in some of the largest cities across the United States. So no matter where you are, as an influx of these homes starts coming in, know which cities are actually being affected the most. Know exactly which cities these are. I'm going to go through the top 15 cities right now as they sit in financial distress in the Airbnb market so that you guys know what markets to pay attention to. Number 1, Sevierville, Tennessee. Number 2, Phoenix, Arizona. Austin, Texas. Myrtle Beach, South Carolina. San Antonio, Texas. Asheville, North Carolina. Salisbury, Maryland. Nashville, Tennessee. Denver, Colorado. Breckenridge, Colorado, which is one of my favorite cities. New Orleans, Louisiana. Lakeland, Florida, Seattle, Washington, Panama City, Florida, and Orlando, Florida. Those are the top 15 cities, all of which are seeing declines in excess of 35%. And so, ladies and gentlemen, become strategically involved in these major cities across the United States. As some of these people start letting go of some of these properties because they're not servicing the debt on those properties, you want to know where those cities are, where there's going to be an influx of inventory. I just gave them to you. The single best way to be able to learn how to leverage these properties are through off-market real estate transactions that come from relationships. And the relationships are priceless when you go into these cities and you deal with the major markets and the major vacation. Is position yourself where you guys know where the number one travel, leisure areas are in every single major city across the United States, where Airbnb and short-term arbitrage models are actually more prevalent than any other areas in those cities. And so right now, this is a great time just to start probing the market. Not that those homes are going for sale now, but ladies and gentlemen, we're moving into the winter months. These aren't travel seasons. These aren't times where people are going on vacations. Yes, we're going to see travel through the holidays, but through the holidays, as we move into January, February, March, April, and May, we're going to see 5 months of decreased travel through the worst seasons of travel and leisure and vacations. And so one of the big things is being able to position yourself in these cities where people panic. Because right now, more than anything, there is not a lot of distress in the single-family residential market. These homes will get absorbed and they'll get purchased. It may put some downward pressure on developers and builders to be able to press down a little bit on their house prices. Now, on the upper median and luxury homes, we're not going to see this. The secondary housing market, you will see a decline, and also in the first primary home residence where you see home prices less than $400,000. But anything over $400,000 and under $1 million, you're going to see a market stabilization where these areas are not being affected as much. Typically, upper median homes are not being rented short term. There are a few luxury rentals out there, but they are a minute amount in comparison to the average median house that is utilized for short-term rentals, typically being between the sales price of $200,000 and $400,000, and that's the predominant area for Airbnb and short-term rental investors. So if you're looking for median homes to be able to hold on to long-term for the BRRRR strategy, long-term rentals, or to position yourself in a position with discounted prices to be able to do short-term rentals in the future, that's the market sector you want to pay attention to. But right now, single-family short-term rentals are down between 35 and 50% across the nation in major cities. And so this will impact the overall residential market for a short time. They're not all going to go on the market all at once. It's not going to be a light switch where you flick it down and all of a sudden everything shuts off, and flick it up and everything turns on as far as sales. This is something that's going to be progressive over the next 6 to 9 months. And yes, you, the investor, has the opportunity to pick these up. If you're an end user, you've been looking for a home, this may be your opportunity to get into a home strategically at a fair market value rate. Now, one thing I will tell you is that I think people are waiting for interest rates to soften. If you're waiting for interest rates to soften, you're going to be sadly and vastly disappointed with the fact that I believe interest rates are going to stabilize where they are and maybe even creep up even a little higher than they currently are right now. Some of the strongest markets that we've ever had economically have sat with interest rates right where they are and even higher than they are right now. It's some of the most historical, strong markets in the past. And so, ladies and gentlemen, position yourself where if you're thinking and considering about buying a home, buy one, because housing prices will continue to go up. In spite of the short-term rental market being in financial distress right now and investors in that arena being bloodied up a little bit, those folks will pass through this, and over the next 12 to 18 months, we'll see the light at the end of the tunnel. Some of that inventory will get absorbed into the market, and then we'll still be in the housing shortage and housing crisis that we are in right now. Some of those short-term rental folks that have low mortgages or are in prime areas that aren't being affected as much will do just fine. But the vast majority of short-term rentals are showing signs of weakness, and it is distressing the single-family housing market today and will over the next 9 months. So ladies and gentlemen, like I always say, it's not if you should be investing, it's what you should be investing in. Today, tomorrow, yesterday is always the time to invest. Don't wait for an up market or down market. It's not whether or not you should be investing, it's what you should be paying attention to and what you should be investing in. And everything that I do, I try to give you guys market information to position yourself strategically for winning results in the residential and commercial sector. If you like this content and you want more content just like it, click and subscribe, pound that thumbs up button, give us a little bit of love, and I look forward to seeing you next time.